All right, let's talk about one of the most frustrating things in all of trading. Why do your good trades, the ones you know were solid setups, just never seem to turn into great ones? Well, today we're going to uncover a super simple rule about market structure and profit targets that I promise, once you see it, it's going to change how you manage your trades for good. So let's start with a feeling. A feeling I bet is painfully familiar to a lot of you out there. It's that nagging thought that, man, you're putting in the work, but something just isn't clicking when you look at your results. So let me just ask you straight up. Does this sound like you? You do all the analysis. You find what looks like a perfect setup, you get into the trade, and then nothing. For some reason, your good trades just don't explode into those massive account-changing wins you see other people talking about. What is going on? And look, we've all been there, right? You absolutely nail the entry, you take a small, kind of respectable profit, which, feels okay for a second. But then you have to just sit there and watch in agony as the price keeps rocketing in your direction without you. It is one of the most soul-crushing feelings in trading, for sure. So what's the deal? What's the real problem here? Now, you might be thinking it's your entry signal, or maybe your overall analysis is off. But the real culprit, the thing that's sabotaging your best trades, is often something way more subtle, something that's kind of hiding in plain sight. And here it is. The big mistake, most of the time, isn't your entry. Your entries are probably pretty good. The real issue, the crack in your foundation, is your exit logic. It's how you're deciding when to get out. Okay, so check this out, because this slide shows the whole problem perfectly. On the left with the green checks, that's the right way to do it. You find the real market structure on a higher time frame, like the 4-hour or the daily, and then you drop down to a lower time frame for super precise entry. But look at the right side, with that big red X. That's the fatal flaw, taking your profits based on that same noisy, messy lower time frame. That's the mismatch that's killing your wins. But you know what? The good news is there's a fix. And it's so simple, so effective, we're just going to call it the golden rule of profit. This is the key to unlocking the maximum potential of your trades. So here it is, the golden rule. Write this down. The time frame you use to find the market structure should be the exact same time frame you use to set your profit target. Now why? It's because the real move, the big one you're actually trying to catch, is defined by that higher time frame structure, not all the little insignificant wiggles and noise on the 5-minute chart. Let's break this down a bit. First up, you've got your structure time frame. I want you to think of this as your big picture map. This is your 1-hour, your 4-hour, maybe even the daily chart. This is where you see the real trend, the key support and resistance levels, and the major supply and demand zones that are actually going to push the price around. Then you have your entry time frame. This is all about precision. This is when you zoom in, down to the 1-minute, the 5-minute, to find that perfect moment to jump in, to see a clear candlestick signal, and to keep your risk super, super tight. Its only job is to get you into the trade. That's it. And finally, the take profit time frame. This is where the logic all snaps into place. It absolutely, positively must match your structure time frame. Doing this makes sure you're aiming for a target that actually makes sense in the context of the big picture. It lets you capture the whole move and just ignore all that distracting market noise down on the lower timeframes. Okay, so now that we get the rule, let's see what a dramatic difference this makes in the real world. Let's look at a tale of two exits, the beginner's way versus the professional's logic. So imagine you found an awesome setup on the 4-hour chart. The beginner, over on the left, sees a tiny little pullback on the 5-minute chart, gets nervous, and bails at the very first sign of 5-minute resistance. The professional, on the right, they keep their eyes on the prize, that major structure level on the 4-hour chart that made them take the trade in the first place. And the results? Well, they couldn't be more different. The beginner on the left walks away with a tiny profit and a massive dose of regret as the price just blows right past their exit. But the professional on the right, they capture a much bigger win, get a fantastic risk-to-reward ratio, and they can actually build their account consistently. So why are these lower timeframe exits just so bad for us? Well, it's pretty simple, really. They are just filled with random market noise, tiny little pullbacks that don't mean anything, and fake reactions that have zero to do with the larger trend. Trying to base your profit target on them is just a recipe for getting shaken out of a perfectly good trade way, way too early. Okay, let's put it all together into a simple 3-step workflow you can start using literally today. Step 1, find your structure on a high time frame. Step 2,
Drop down to a low time frame for your precision entry. And step 3, the most important part, set your take profit using that high time frame structure you found back in step 1. That's it. It's that simple.
If you remember absolutely nothing else from this explainer, please remember this. Structure decides profit. Entry decides risk. Your potential profit is determined by the big picture map. Your entry just decides how much you're willing to risk to see if that potential plays out.
And honestly, this isn't just some technical rule. Getting this right is a fundamental shift in your entire trading mindset. When you adopt this logic, you're taking a huge step toward thinking, and more importantly, trading like a professional. And the psychological edge you get is massive. Seriously, when your take profit is based on solid, high time frame logic, you're not sweating every little 1-minute candle. This is what lets you catch those big winners. It leads to way less emotional decision-making, and it builds the kind of real trading discipline that can last a career. You know, this slide really sums up the whole shift in thinking. Amateurs are constantly driven by fear. They're always asking, how fast can I get out of this trade and just lock in a tiny profit? But professionals, they're driven by analysis. They ask, based on the market structure, how far can this price realistically go? It's a total game changer. So I'll leave you with this one last question to think about. When you look at your own trading, ask yourself honestly, are you building a strategy around the hope of grabbing quick, small wins? Or are you building it around the solid, logical foundation of market structure?